Hi everyone, my name is Nick Cannon, and today in this short video I'm going to explain how traditional banking and infinite banking are two distinct financial systems that have their own unique characteristics and benefits. First, let's talk about traditional banking. Traditional banking is the more commonly known and widely used system in which individuals deposit their money into a bank account and can access it through various means such as writing checks, using debit cards, or making online transfers. Banks use this deposited money to make loans to other individuals or businesses, and in return, they pay interest to the depositors. On the other hand, infinite banking is a financial strategy that utilizes whole life insurance policies as a means of savings and investment. In this system, individuals purchase a whole life insurance policy, pay premiums into it, and then borrow money from the policy's cash value at a low interest rate. The policy's death benefit is also a source of savings, and the policyholder can use the death benefit to provide for their family in case of their untimely death. One of the main differences between the two systems is that traditional banking is based on the fractional reserve system, which means that banks are only required to keep a fraction of the deposits on hand and can lend out the rest. Infinite banking, on the other hand, is based on the concept of self-banking, which means that the individual is the bank and they have complete control over their money. Another significant difference is that traditional banking is not very flexible when it comes to borrowing money. Banks have strict lending criteria and may not approve loans for certain individuals or for specific purposes. Infinite banking, on the other hand, allows policyholders to borrow money from their own policy at a low interest rate, and they can use the money for any purpose they see fit. In summary, while traditional banking is a widely accepted and well-established system that can provide a basic level of savings and investment, infinite banking offers a more flexible and self-sufficient approach to managing one's finances. It allows individuals to take control of their money and use it for their own benefit in a way that is not possible with traditional banking. Another difference between traditional banking and infinite banking is that traditional banking is heavily regulated by the government and is subject to various rules and regulations. This can be seen as both a benefit and a drawback. On the one hand, regulations help to ensure the stability and security of the banking system, but on the other hand, they can also limit the flexibility and autonomy of banks and their customers. In contrast, infinite banking is not regulated by the government, which means that policyholders have more control over their money and can make their own investment decisions. However, it's important to note that while government regulations can provide a level of protection for consumers, it also means that there is less oversight on the financial institution and its operations, which may result in a greater risk of fraud or mismanagement. Another benefit of infinite banking is that it allows for a greater level of tax efficiency. Because the money in a whole life insurance policy grows tax deferred, policyholders can potentially save a significant amount on taxes over time. Traditional bank accounts, on the other hand, are subject to taxes on interest earned. In terms of returns on investment, traditional banking typically offers lower returns on savings and investment accounts than infinite banking. This is because banks use depositors' money to make loans and earn a profit, which means that depositors' returns are limited. With infinite banking, policyholders can earn higher returns on their investment through the cash value growth of their whole life insurance policy, which can compound over time. In conclusion, while traditional banking is a well-established and widely used system that can provide a basic level of savings and investment, infinite banking offers a more flexible and self-sufficient approach to managing one's finances. It allows individuals to take control of their money, make their own investment decisions, and potentially earn higher returns on their investment while having a greater level of tax efficiency. However, it's important to note that infinite banking does not have the same level of government oversight and protections as traditional banking. As always, it's important to do your own research and consult with a financial professional before making any financial decisions. Thank you for watching. I hope you learned something new today. Please don't forget to like and subscribe. Also, if you'd like more information or want to set up a call to discuss your situation, click the link in the description.